Clover Health just keeps on expanding what it can do. On Friday, they announced a grocery benefit that is available to eligible members in 101 counties. They have participating retailers including CVS, Kroger, Walgreens, and Walmart. The CEO, Vivek Garipalli, says that the inspiration for a grocery stipend stems from the countless empty fridges our nurses encounter when checking on our members in their homes. This benefit isn't just about improving nutrition, we're addressing food insecurity in its truest form, where people have often had to make the hard choice between buying food, filling their prescriptions, or paying their utility bills. And that's great to hear from the CEO. And with this being said, first of all, I think that this is a great benefit to offer those members. And second, this again shows that the Clover Health is constantly expanding what it can do and always trying to improve. One other key part that this article mentions, though, that caught my eye is it says that Clover Health is an innovative technology company committed to improving health equity for America's underserved seniors. And calling themselves a technology company makes a good amount of sense because the large focus of the business is on Clover Assistant. Also, a nice thing, as I mentioned, is that a large amount of their leadership also comes from tech companies as well, such as Uber, Google, Microsoft, and more. So I think that the phrasing of calling yourself a technology company is important because it changes your mindset of what this company is and how it's going to grow as a business. Like I've been saying, Clover Health is in its hyper growth stage. It just got a chief growth officer who came from Uber, for example. And when I think about them phrasing themselves as a tech company, I was wondering, what other companies are like that, right? Where it is a mix of being in two sectors, but wants to position itself as a technology company. Then, I see this post a few days ago from Reddit user Dr. Euro saying that Clover Health is kind of like Tesla, revolutionizing the healthcare industry. This thing is a pressure cooker. And I'm in agreement. When you think of Tesla, you wonder whether it truly is a car company or it's a technology company. And looking at this article, we can actually see that Tesla as a technology company gained credibility in 2013 when the stock price shot up by 382% within a single year. Clover Health has other similarities, like having a P/E ratio that is negative, like tech companies and Tesla pre-2020. They also grew their revenue 46% year over year to $673 million in 2020, just like Tesla's revenue change as well. And this article does mention, that it helps balance that negative P/E ratio. Lastly, Clover Health is a disruptor, just like many other tech companies out there. They are 41% cheaper than Medicare and 17% cheaper than the nearest competitor, and are constantly taking market share in each county that they get into because of that. So, overall, I'm pretty happy that they are positioning themselves as a technology company, and I hope that as investors, we see the great gains like companies in the tech sector over the long term. Now, we're going to take a bird's eye look at the last 2 months for the price movement. We can see from right here that we have this beautiful spike to $28.85. And when it dropped down, and when you look at it, you can see that over time, the price, in my opinion, has been starting to leveling out. And just a few reminders, the current price is still under the initial list price of the stock at $10. We're still under the one-year analyst price target. And Clover Health still has a lot of cash, over $600 million, and there is still growth opportunity. So I think that we are very close to a reversal, but if, and that's a big if it drops more, I will still be hodling and buying the dip, as I still believe this company in the long term and still believe that we are still on track to see this stock squeeze. So with that being said, let's take a look at the price movement of the day. So on Friday, it was a red day. We opened up at $8.40. And that was actually an overall increase of about 14 cents from the previous day, closing at $8.26. Almost immediately, we saw this stock start to go down, reaching a low point of about $8.12. Then it did start to uptick, reaching a price of the intraday high of $8.52. Okay. And so following that, we did start to drop. And in the tail end of Power Hour, we reached the intraday low of $8.11 right before closing the day off at $8.20. In the after hours, we maintained that price, which is great to hear. And when I look at that closing and look at the previous close of $8.26, there really isn't much of a difference between those two. And I would again reiterate that we are potentially starting to see this stock leveling off and finding a bottom. But please make your own decision on that. And when you look at the volume for the day, we had 17.38 million. And that's about half the volume of the previous day, which in my opinion is pretty surprising. I mean, it is a Friday, but to essentially half the volume is something that could potentially be a good thing, as it would increase the days to cover if that continues for the stock. Also, it is about 1/4 the average volume of 57 million. And so, when we check out the order flow, we can actually see that there was indeed a decent amount of outflow by about 0.62 million more than inflow for this stock, which to me is still pretty surprising, as I would think there are more financial whales and institutions that would be buying the dip. Next, we're going to look at the short interest data for the day. And if you're getting value from this video so far, please smash that like button for me. It really helps. Also, please subscribe and ring the bell so you can get notifications on my upcoming videos. In Ortex, we can actually see the short interest percentage of the free float is sitting at 27.66%, which is a decrease by about 0.84% from the previous day. In general, that is still a pretty high short interest percentage of the free float. We can also check the cost to borrow average is sitting at 3.12%, with the max at 8.29%. And currently, the days to cover is sitting at 0.78 days, and the utilization rate is at 86.92%, which is a bit of a decrease from the previous day. So overall, pretty promising data that would help the potential for a short squeeze to occur. Next, we're going to go check out the iBorrowDesk for a fee update. On iBorrowDesk, we can see that it monitors borrower rates and availability using interactive broker data. We are currently seeing a fee of 2.9% with 5.2 million shares available. Next, we're going to visit Ape Wisdom to check out the trending stocks on Reddit in the past 24 hours. As you can see, Clov is sitting at number 5. Okay. And that is still really high up there. And when I saw these rankings, I was still pretty surprised, about Kraft Heinz. Apparently it's high up there. I haven't seen Kraft Heinz be up on this list ever, essentially. Right. And I looked into it. Apparently a Redditor posted on it, they put ketchup on their pizza, and this was in Wall Street Bets. And so that did gain a lot of traction. And then they even did a due diligence report on the company, mentioning even that Warren Buffett is also interested in the stock as well. So that goes to show that how mentioning Clov in different subreddits can really have a big impact on this trending stocks list. So keep that in mind and keep on posting out there. Let's now check out that Clov subreddit page. And as you can see, we have 37.8 thousand members, and we grew by 100 members for the last 2 days. So make sure to tell everyone you know to join our great subreddit. You have great memes. I mean, who doesn't like memes? And of course, we have discussions, due diligences, and overall just nerd out about the stock. So check it out. The link is in the description. Also, if you sign up for Webull in the link below, you can deposit $5 and get 2 free stocks valued up to $2,300. And as always, have a great weekend, you lucky people. Take care. Bye-bye.